Guys, I think Uncle Jerome just broke SCHD for 2024. Let me explain. On Wednesday, the Federal Reserve decided against an interest rate hike, but indicated it still expects one more increase before 2023 ends. But even more of a concern, it now expects even less interest rate cuts next year than previously expected. The good news is if that an interest rate increase happens, the Fed has indicated this will likely be the last one for this cycle, which has reached nearly a dozen increases since March of 2022 and has interest rates at the highest in over 20 years. Investors, you wonder why the housing market is so expensive. Who wants to buy a house when they have such a high interest rate these days? Plus, all those people who bought or refinanced a couple years back have nearly a 0% interest rate. I bought my home in 2021 and I can't imagine selling it because I'm basically robbing the bank right now at my super low interest rate that I locked into. It creates a supply and demand problem. The rate of inflation these days is considerably higher than what I'm paying the bank in interest. And that's actually a big part in why the Federal Reserve raises interest rates. It's to cool down inflation, which is currently at 3.67%. That's at least the one that's reported, guys. Don't hate me in the comments. So this means your money is losing purchasing power every single day. So how do the rich keep staying rich? How are they beating inflation? While the poor are buying liabilities, the rich are buying up assets. This could be real estate, bonds, private businesses, but my personal favorite is the stock market, which has historically outpaced inflation over the long term. And one of my favorite ETFs is SCHD, the Schwab US Dividend Equity ETF, a fund that is passively managed based on criteria. So I know I don't need to be lifting a finger. I know I'm going to be part owner in some of the best companies in the world. But SCHD has really struggled this year, down nearly 4%, while the overall market is up 15%. And unfortunately, with the Fed's news, there won't be as many decreases next year. And I have a feeling that SCHD will continue to skid in 2024. You see what I did there? You see, there's this inverse relationship between interest rates and the stock market. Higher interest rates are typically correlated with negative impacts on earnings and stock prices. This is because borrowing is now more expensive for a company. So they're less likely to invest in research and development projects, they're less likely to hire more employees, they're less likely to do those renovations or expansions that they might do in lower interest rate times. Plus, if I can get a 5.5% interest rate on certificate of deposits or a really high interest rate on money market accounts, all these are essentially next to risk-free. Why wouldn't I just put my money in there and get that money and not have to worry about it? And this is what a lot of rich people do. They're more in the trying to preserve their wealth mode of life. So they're going to be taking less risk, they're going to be investing in less riskier asset classes versus stocks, which can go up and down in value on any given day. The three largest positions in SCHD right now are Amgen, AbbVie, Pepsi, which pay a dividend yield of 3.16%, 3.86%, and 2.89% respectively. You can get a 12-month CD at Discover at a 5% interest rate and not worry one bit about your money. So as a result, rich people sell out of stocks and move into safer assets. That's going to cause stock prices to go down. That's just basic supply and demand. And this is exactly why I think 2024 won't be a good year for SCHD. Because the companies that SCHD holds, people are going to be taking their money out of those companies and investing them into safer assets. But is it all gloom and doom? And why am I going to actually be buying more shares of SCHD almost on a weekly basis? That's because I know historically bear markets, they only last about a year or two, while bull markets, when the stock market goes up, typically they last anywhere from 5 to 10 years. This is when stock prices reach all-time new highs and you wished you could have hopped into your time machine and slapped yourself for not buying more when the share price was lower. but you don't need a time machine if you take advantage of great buying opportunities. Guys and girls, if you go to a store and you see stuff is on sale, that doesn't mean you run away because prices are too low. Instead, you buy because you think you're getting a great deal. It's only with stocks that people want to pay more, and they want to buy at the top. And with SCHD, we're getting a very high quality ETF. Definitely a sleep well at night stock. 100 plus blue chip dividend paying companies across several different sectors, automated portfolio rebalancing and positioning. They're going to be following set criteria to get companies that have a history of paying dividends and have good financial ratios. These are all things that we would look at when we're picking stocks ourselves. And yeah, they might have a 3.5% dividend yield, which I don't care what yield max is paying out. This is still a really good yield, especially because SCHD is time and tested. They don't erode their capital over time. They're relatively consistent with their dividend payments. And over time, that yield on cost really grows. That's because the share price we buy it at, that never changes, but the dividend will ideally get bigger and bigger each year. Plus, they're most likely going to be qualified dividends, which means lower taxes, so that's always super nice. So yes, SCHD, because of the Fed's interest rate decision, it's gonna hurt for a little bit longer. Thank you, Uncle Jerome. It's probably gonna hurt the overall economy as well. The Fed just has that much power, but good thing we vote for them. Oh wait. One company that's really hurting bad this year and probably will continue that skid into next year is the real estate company and Realty Income, which is now giving a 6% starting yield. Catch more about them right here. I'm buying more shares almost on a weekly basis still. My videos are always found in podcast form under the Collect Cash podcast name. Thank you to my Patreon supporters who get to see all my weekly trades and my full $155,000 portfolio. Let me know how you think the stock market will fare next year with those high interest rates, and I'll catch you on the next one.